Hey, what's up, Credit Movement community? It's Ryan. This is part 3 of the inquiry series for the Daily Credit Minute, and I think you're going to find this to be the most interesting. It's on promotional inquiries. Now, I'm sure throughout your life you've gotten something in the mail from a credit card company that says you've been pre-approved or you've been pre-qualified. You've probably also wondered how in the world they got your name and mailing address. It's quite simple, actually. The credit bureaus are notorious for selling your information, banks and credit card companies being their biggest customers. So, a credit card company will approach the credit bureaus and say, we want to buy a list of names and mailing addresses from you of people that fall into a certain range of credit scores. They study consumer behavior. They know that if they buy a list of people that are between 620 and a 660 credit score, they're typically people that are somewhat irresponsible, but they pay their bills on time. What does that mean to the credit card company? It means that they're going to offer that individual maybe a $2,000 limit, and that consumer is likely to max that card out within the first few months of having it open and make minimum payments for the rest of their life at 30% interest. It directly impacts that credit card company's bottom line. They make money off of interest and annual fees. So it's important to understand promotional inquiries. You can stop promotional inquiries by going to optoutprescreen.com. And I'll link that in the comments below for you. I hope you learned something from this series on inquiries. We did hard inquiries, which are the ones that hurt your score. We did soft inquiries, which are also known as account review inquiries. And now you know a little something about promotional inquiries. Share our posts, like our page, but keep coming back for more.